Welcome to the Opening Bell Report.
Today we are breaking down a really bullish analyst report on RZLV AI. That's ticker RZLV.
That's right.
And this isn't just about a stock moving a bit. We're talking about a fundamental shift in expectations that Wall Street seems to be just catching up to. A shift that, frankly, screams strong BY.
It absolutely does. The analysis we're digging into is titled RZLV AI, the $12 price target breakout analysis.
And that $12 target is the headline grabber.
For sure. Because when you look at the stock, it's trading around, what, $4.06?
Right.
So that $12 target isn't some small incremental bump. It implies a potential 200% upside from where it is right now.
I mean, a 200% upside is always going to get my attention. But the real story here, I think, is the suddenness of it, the size of this upgrade. It really suggests that the existing consensus on the street had completely missed a major turning point for this company.
Precisely. We have to look past that big headline number and ask the real question. What specific new information, what data in the company's guidance made a top analyst make such a bold call?
So that's our mission today.
Yeah, our mission is to distill those key figures and look at the technology, this brain commerce engine they have that's pushing this valuation from just a speculative idea into what this report is calling elite software territory.
Okay, let's unpack this then. Let's start with the catalyst.
The upgrade itself.
It came from H.C. Wainwright, and specifically, top analyst Scott Buck. So this isn't some junior analyst taking a flyer.
No, not at all. It was an official and I'd say massive increase. He moved the price target from an already aggressive $10 straight up to $12.
And the reason given?
The report specifically cited massive revenue visibility. That was the phrase they used.
Okay, hold on. Massive revenue visibility. That sounds a little like Wall Street jargon.
It can be.
If they had this visibility before, why was the target at $10? And why were the estimates so much lower? What does that visibility actually mean in this case?
That is the perfect question, and it takes us right to what the report calls the guidance shock.
The guidance shock.
The analysis says management just raised its 2026 revenue guidance to $350 million. That's where the visibility suddenly became crystal clear for the analyst.
Let's just pause on that number for a second. $350 million. Because without the context, it doesn't hit as hard.
You're right, the context is everything. The old Wall Street consensus, what everyone was expecting for 2026 revenue, was only around $170 million.
So they basically doubled it.
They more than doubled the expectation overnight. Going from $170 million to $350 million isn't an update. It's a complete reset of the entire growth story.
And an analyst model just can't handle that kind of acceleration without a massive re-rating.
Exactly, which is why we suddenly see a $12 price target pop up.
So for you, the listener, that really is the surprise factor.
Yeah.
This isn't just steady growth. This is hyper growth being priced in for the very near future. It feels like the company is shifting from a prove it to me story to a how high can it go story.
And if we connect that to the bigger picture, it moves RZLV from being, a theoretical AI concept stock,
Which the market loves to undervalue.
right, to a tangible, rapidly scaling commercial business. And the analysis gave the proof points to back that up, starting with what it called the profitability inflection.
Numbers always matter more than the narrative. So tell us about this inflection point.
Okay, so the analysis confirmed a really crucial milestone. December 2025 was the company's first profitable month.
Their first profitable month.
And they weren't just squeaking by. They generated over $17 million in revenue in that single month.
Wow.
So this moves the whole conversation out of the idea phase and into proven execution. You now have a company that can scale and generate positive earnings.
Okay, so profitability is a huge signal. The business model works. But the market is always looking ahead. Once you're profitable, the next question is about velocity. How fast can you keep growing?
It does. And it does that by pointing to their future goals, which are extremely aggressive. Management isn't starting at that $350 million guidance for 2026.
What are they aiming for then?
They are aiming for a staggering $500 million annual recurring revenue run rate by the end of 2026.
A $500 million ARR run rate. That's the exit velocity. It confirms they believe this revenue is high quality, sticky, recurring revenue, the gold standard for a software company.
But the analysis didn't just focus on the size of the revenue, it focused on the quality of that revenue. And this, for me, is the most critical detail for you to understand. It's all about the projected margins.
Right, because 500 million ARR is one thing, but the margin quality is what determines if you trade at a 5x multiple or a 20x multiple. What did the analysis find?
This is the detail that justifies that $12 target. H.C. Wainwright is projecting gross margins exceeding 80%.
80%.
And the analysis explicitly calls that elite software territory.
Okay, we need to spend a moment on that. 80% gross margins. That is fundamentally different from normal e-commerce.
It's a different universe.
If you look at the big retail or e-commerce giants, their margins are what? 30, maybe 45% if they're lucky, because they have inventory, shipping, logistics.
Exactly. If Result AI can lock in 80% or higher, they aren't playing the same game. They're selling pure digital leverage, an AI platform that scales without the cost scaling with it.
And that margin structure puts them in the same bucket as the highest valued size companies in the world.
It's the foundation for the entire $12 price target. That high margin, predictable revenue stream is what commands a premium valuation.
So the hypergrowth and the elite margins, that takes us directly to the technology that has to be driving this.
Right. We have to look under the hood. What is this brain commerce engine?
I mean, every company says they have an AI engine now. What makes RZLV so different? Why is it seen as this disruptive force?
It's the core function. Look, a lot of companies are building chatbots for, basic customer service.
Answering simple questions, finding an order status.
Yeah. Resolve is building the specific engine that lets a user actually buy products inside the chat.
So it's not a bot that sends you to a website.
No, it integrates the whole transaction from discovery to payment right there in the AI conversation.
It's the point of sale itself. A full stack transaction platform inside a conversation, that removes a ton of friction.
That is the bull case right there.
Yeah.
The analysis frames this as fundamentally disrupting retail search.
Disrupting retail search.
Think about how you buy something now. You go to a search platform, you type, you filter, you click a link, navigate a website, maybe make an account.
It's a whole process. Lots of places to drop off.
Correct. The argument here is that with this system, you just tell the AI, find me a blue hiking backpack under $100. And the AI not only finds it, it completes the purchase for you right there.
So this is why the analysis suggests it could impact the existing giants. It creates a whole new path for the consumer. It bypasses the traditional search and e-commerce platforms.
Absolutely. The user can just ask and buy. That shifts consumer behavior away from browsing platforms and puts all the power in the AI platform that handles the transaction.
And that's why the margins are so high. They aren't selling backpacks. They're selling the software that sells the backpacks.
That's the key. So now that we get the guidance shock and the business model, let's talk about how the market reacted to all this new information.
The reaction was pretty telling.
It was immediate. The stock rallied over 11.5% on the day the report was updated, January 14th. It closed strong, right above that $4 level.
And that rally is significant because it came after what the analysis called a classic technical setup.
Yes. The report confirmed a classic buy the dip setup.
So what does that mean for you listening?
It means the stock had dipped a bit earlier in the week. That probably scared off some smaller investors, what the report calls the weak hands. But then, right after this guidance shock, the serious buyers stepped in hard. It suggests the panic sellers are gone and the stock is now in the hands of bigger players who believe in this much higher valuation.
Let's give you the specific technical levels from the analysis. The stock was at about $4.06 when the report came out. The analysis identified strong support at $3.45. That's the floor. The price where big money feels comfortable defending the stock.
And then the key level to watch, the breakout watch level, was set at $4.50.
So crossing that would be a big technical signal.
It's a very big signal. A sustained move above $4.50 would likely bring in a lot more attention, a lot more volume, and suggest the real climb towards that $12 target is underway.
Okay, so let's bring this all together. Let's summarize the core findings from this deep dive.
Sure. The analysis really rests on three core pillars. Pillar one is that doubled revenue guidance, the shock of going from a $170 million consensus to a $350 million target for 2026.
Pillar two is the proof, the confirmed profitability. That December 2025 month, with over $17 million in revenue, proving the model scales.
And pillar three, maybe the most important for the valuation, is the revenue quality itself. The expectation of those elite 80% plus gross margins, all driven by the brain commerce tech.
So you put those three together.
Massive guidance, confirmed profitability, and elite margins. The conclusion from the report is a very clear, strong buy why.
It's a fascinating position to be in, being the engine that lets transactions happen conversationally everywhere. Basically the software layer for the future of e-commerce.
The analysis frames it all as disrupting retail search. If they hit that $500 million ARR target and those margins hold up, you really have to consider the implications for the giants that dominate search and e-commerce today. It's a fundamental shift in how money moves online.
Which leaves us with one final big question.
Our final provocative thought. The Analyst upgrade cites massive revenue visibility, so they're confident in the pipeline. But if brain commerce really lets users bypass traditional platforms and just buy directly through chat, think about that. How fast could that $500 million ARR target be exceeded if adoption goes viral?
Faster than the models predict.
Way faster. Think about the speed of disruption we've seen in AI. Does the current guidance, even as high as it is, truly account for the pace of viral adoption when you remove that much friction from a purchase? That's something to think about.
Don't forget to like, share, and subscribe for more.